Hello, everyone. I am Dr. Duru with the Market Breadth. You can find me at drduru.com/122, all one word, no numbers, /blog. So that's drduru.com/122/blog. Hey, today, quick update. It was a big surprise day. The CEO of Chipotle Mexican Grill, ticker symbol CMG, announced his immediate departure, and he is bailing for Starbucks. Now, I've written in my blog about how the market is on edge right now because of severe market dislocations and disruptions that basically have people overreacting to every little bit of news. I was focused on economic news, but this kind of news also causes huge overreactions. So I know I just finished talking about how CMG looked good for a long-term investment, and you could review that video at your own if you so choose. But I'm going to focus on today's news and its implications for the stock. Again, as a reminder, this blue line is the 200-day moving average. It is a long-term trend line, and right now, well, before CMG was looking pretty good at breaking back above that. Now you can see it's starting to develop a pivot, which is still, it's not great, but it's also not bad. The trend line's going up, so if the stock is pivoting around that trend line, then over time it is still heading upwards in the right direction. So today caused a major dislocation, today's news, and the stock dropped 7.5%. I think it got as low as 10 or 12, 10, 11, 12% at the low of the day. And again, I want to emphasize the reason why you pay attention to technicals is because they matter, particularly when emotions are running high and you're either in a market that's euphoric or it's in some pit of despair, extreme despair. And today, of course, was a pit of extreme despair. But look at this. Hopefully, let me zoom in a little bit. Hopefully, you can see that. Oh, no, the volume line on extremely high volume. So this means that there was a lot of trading action. You can see with this red bar, much higher than any of these days before it. And probably, I'm guessing, higher than any day in any recent time. I'm just scrolling back here. Yeah, I don't even see it. Maybe during the pandemic, there was more trading volume than today. But the reason why trading volume is important is because it means that for a down day, hopefully the selling has been washed out. In other words, all the motivated sellers have exited the stock and dumped it overboard. And again, what I was trying to say earlier is that technicals do matter particularly at times when people are just trading and investing with their emotions. The stock stopped on a dime at the intraday low from last week's market dislocation. So that low held, that's important to note for the bulls. In my last video, I believe I said if Chipotle closed below this point, it would mark a bearish turn for the stock. So buyers stepped in right at the last moment to save the stock from flipping outright bearish. So I still hold a bullish view, but I do acknowledge that the stock is a little bit more precarious than it looked last week, given this extreme reaction to the CEO leaving. Now, because I am a contrarian against extreme reactions, I added to my Chipotle position right around these levels. Now, the interesting part of this is that I didn't realize I had a pairs trade going on because I'm also an investor, or I should say now I was an investor in Starbucks. So Starbucks, who gained the CEO, the stock soared, closed at almost 25% up today. It's back in a bullish position. It's up above its 200-day moving average. And again, I won't go into the long story on Starbucks. I wrote about the stock when it cratered post earnings here by 16% to a 2-year low. I called it the Cramer bottom because Cramer was extremely panicked. Jim Cramer of CNBC was extremely panicked about the stock. And sure enough, this bottom has pretty much held the entire time as I expected it to. Now, the interesting thing is here is that the stock jumped 6.9% on news of a large stake from Elliott. Elliott is a big activist investor. And I took note of that. And when it pulled back, I bought back into the stock. I should say that I bought into this bottom and I sold into the rally. Again, technical factors. I waited and waited and waited. And then I waited too long, thought I had missed the rebound, but then the stock started to come back down. So I bought into this pullback and I just held it. And I actually thought I was going to have to hold it for quite some time. I even held it through earnings. I did buy some call options into earnings. I did not buy call options afterwards, and I'm regretting that. But I did build up a decent sized position in Starbucks based again on the theses that I've written about on my blog. And today was essentially the big payoff. It's not like I was buying it expecting this big payday. I sold the stock. I think it's pretty rich again. It's back into positive territory, I believe, for the year. So that's a good accomplishment for the stock, but it's way overbought. It's extremely stretched above its upper Bollinger Band, which is this band that defines price volatility. And it's, of course, well above the 200-day moving average. So it means that hopefully for those of you who are going to stick around or who are looking to buy on a pullback, Starbucks should hold this support. But that's what I'll be looking for in coming days, coming weeks, to see if this trend line now holds. Now, I'll just conclude this by just showing you why I think this reaction is kind of extreme. Nichols came from Yum Brands, and I just want to show what happened when he left Yum Brands for Chipotle. I think I put this on the weekly chart. Yep, there we go. So Brian Niccol, who was the CEO of Chipotle and now has bailed and jumped ship to go to Starbucks, he came from Yum Brands. He was the CEO of Taco Bell for quite some time, I think, and left on February 13th, 2018. You can see that the stock just bounced from there. It had no problem rallying pre-pandemic. Of course, it collapsed during the pandemic, but it had no problem bouncing back up. I point all this out to say is that assuming nothing truly fundamental has changed about Chipotle's business over time, the stock should heal. And that's the thesis that I had in my mind when I added to my shares today. So today forced me to be just full outright bullish on CMG with full recognition of the risks ahead. So again, as always, I put this together for informational purposes only. I'm not giving investment advice. Please do your own homework, make your own decisions, do your own risk management. And of course, smash the like button, subscribe if you want to hear more. And you can, of course, go to my blog and subscribe there if you want to get more details on these kinds of analyses. Until then, take care and thanks for tuning in.